Okay, everybody, good evening. It's John Seville from Acorn Wealth Corporation, and this is the executive summary for the 9th of June. Okay, so we are at the bottom of the channel. We kind of tagged down to that level that we anticipated last week. We hit the low of 2072, so right in that 2070, 2075 range we discussed. So from here, we could be looking for a bounce. Now, is it likely to happen? Well, right now the momentum is to the downside. We can see the Twigs money flow has crossed negative. We have seen that before, though, and the market has bounced, such as back in January, and we have bounced off these kind of levels before. It could be more likely that we continue down and start to test the levels of 2040 on the S&P, but only time will tell. So tonight, we go through a bit of a summary of a few different stock plays for all the different types of strategies that we could be getting here. Firstly, we're going to talk about the extremes long. So if we have a look at the support on MTGE, when we go back all the way here to July 9th, 2013, we have an extreme level here. So playing the extremes, if we get a sharp drop down to 1633 is what I'm looking for, we could have a nice potential bounce up to 1750, which is where this high of this previous sharp reversal was, where the current downtrend is stemming from. And with that, I'd be putting a stop loss in at 1595. We can see we've got positive money flow, so that could mean that there's some buying support coming in as this drop occurs. So, good risk reward. We've got about roughly 40 cents of risk for a $1.25 of reward, so at 3 to 1. CBG, also in extremes. We're currently at that extreme level. You can see if we go to the current chart, you can see the money flow is currently positively divergent. The low today was 36.47. The low here was 36.52, so we have slightly broken the low. This was something that I was looking for. If we can get a bounce from 36.60 up to 37.50, we got basically roughly $1 of reward, and with a stop criteria at 36.37, we've got about 23 cents of risk for about 90 cents of reward. So a good risk reward. The probability is a little lower on this one because we have already broken the low. That is the concern. So it could be a quick stop out, but the risk reward is good. CXW, or Corrections Corporation of America, another extremes. Now again, these extremes are about lower probability but good risk-reward ratios. So this one's looking at a possible long from 36, let's have a look here. Looking at this level here of 33.60. From 33.85 up to 34.88. So we've got basically a $1 of reward there, and the stop criteria would be down at 33.48. So about 40 cents of risk for about $1 of reward, so about 2.5 risk-reward ratio there. MYGN, also in extremes. Again, this level has been tested a few times. That's the downside to it, but there's been significant bounces. But because it's been tested a few times, I'd be looking at a target which is a little bit more conservative. So on MYGN, again, possible long from around 32.13, just above this support level, up to 33.53. So we have $1.40 of reward, and I'd look at a stop loss at 31.90. So $1.40 of reward for about we're looking at 23 cents of risk. So again, really good risk-reward ratio. CBK is the last of the extremes. And you can see we came right down to it. We had a sharp reversal here before. We've got higher money flow than where we were previously at, so we have that divergence in the longer term. And we could maybe get a little bounce here from 425 and be looking for a more aggressive target here given the power of this previous zone straight up to this level. So looking at a possible upside of 497 with a stop at 403. So we're looking at about 20 cents of risk for 80 cents of reward. So that, or 70 cents of reward. So again, we have those risk-reward ratios around 3.5 to 1. Okay, on the fallen angel side, BTU. This one is kind of it's a little bit of a interesting one because you can see it's a bit of a descending triangle. It's definitely having struggling with the moving averages, but energy could be having a bit of a recovery rally sometime soon. So we had 17 million shares over 13 million yesterday, and went up to 7.19% rally today, closing at the top of the range. Still has to overcome the moving average, but for those of you who are speculating on the energy plays, we could have a possible long from 333 here up to 357 where the moving average is. But then I'd be looking at a secondary target of 407 as we start to come into this previous resistance. So that would be what I'm looking at here on BTU. And again, the money flow just starting to diverge here, which is what was encouraging on this play. FLDM. The one downside to this is it's snapped down to support here at 22. So that's a bit of a warning. So we do want to get confirmation here. And that's why I'm looking for a rally above 24.73 with a target of 28.64. So we've got about $4 of reward. And I'd be looking at a stop loss at that point of 22.97. So we've got about roughly $4 of reward for under $2 of risk, about $1.80 of risk. So again, about 2.5 to 1 on FLDM, and that money flow divergence is looking really strong at the moment. And the third on the fallen angel list is ARAY. This one actually looking quite good. Just so you can see it's rolling up. It hasn't suffered too much from any of the downturns in the market. None of those nasty spike downs. So this could be a nice long, actually, from a break of anything from $6.28 or above, with a target of 6.87 and a stop of 6.07. Now, to break to the short side, we've got a couple of head and shoulders. RGEN is the head and shoulder if you're one of those who likes those plays. You can see that it's just starting to break through. We've got substantial insider selling. So we could look at a break of $37 could bring us down to as much as $32.57. And seeing as we would be breaking that support at that point, I'd be looking at a stop of $38.43. AVA is the next one. Now this is a head and shoulders which has the downward slope, which is usually higher probability, and you can see that if we measure the distance from the head to the neckline, we could be looking for from a drop from this break all the way down to 27.50. So considering it's also coming across this kind of many times tested support level, I'd be looking for a break of that. So if we do get a break below $30.13, I'd be looking at a target of 27.53 with a stop loss at 31.15. Now for the breakdown trades, G or Genpact. This has very strong support here as well as Fibonacci support. So if we can break below 21.66, I'd be looking at a target of 19.03, which is coming down to the 61.8 Fibonacci. So we've got a decent kind of $2.60 drop, and I'd be looking at the stop loss around 22.33. So a $2.60 drop for about 60 cents, 70 cents of risk. So we've got a decent 3 to 1 plus reward on there. And lastly, DYAX. This is a descending triangle, so again a breakdown stock. Looking for a break of 23.29 with a target of $19 and a stop criteria at 25.13. So those are some a few different opportunities across the board. And so again, looking at the last category, we look at flags. So for flags, we've got CUR. So if we can see a nice pullback on this one, kind of down to that $2.10 area, or maybe even $2.15, this could be a further extension that could rally back up to around that $2.50 zone. So that is quite exciting on the flag play. And the other flag is SEED. Huge rally today. This could have a sharp pullback, so I'd be hesitant to think where it will pull back to, but somewhere around 230 could be something that we're looking for here, but we'll be watching to see what happens in the market tomorrow. Now that is your executive summary, and we look forward to seeing you all soon.